Saturday, April 1st, 10:30 a.m. New York time. Hope we just ended another month and also ended the first quarter of the year. Let's look at a combination of the yields, U.S. yields, as well as the U.S. currency market, also referred to as the Forex market. The yields also referred to often as interest rates. Let's determine who's the winner, who's the losers for the first quarter of the year. Going to look at the higher duration of the yields. Again, yields reflect U.S. interest rates. U.S. interest rates have an effect on currency markets. Looking here at the 30-year U.S. yield. Yes, it did close red for the month, but it made a new high for the year. Has making higher highs. All three of these months for the year have been making higher highs. The trend is up. So one would expect the interest rates to continue going higher until we see a trend reverse. Whatever smack they're talking heads in the news media, politicians, the Federal Reserve is still on course raising interest rates. That's a fact here on the 30-year. Looking here on the 10-year, same thing. New high for the year, higher highs. Looking here on the 5-year, again, same thing, new highs, new high for the year. And the 2-year, new highs for the year. A lot of volatility, but again, have made new highs for the year as well as new lows. So let's zoom in to look at them again. Right off the bat, here the 30-year, still below the high of last year, but again, has been making higher highs. Here as well too. Higher highs, still below the low of last year. As well here, still below the low of last year. Here, new high for the year and new high from last year. So looking here at the 2-year, the end of last year really got tight in this consolidation, small trading ranges, where this past month, huge trading range. Yeah, it closed red again. So the shorter term U.S. Treasury has certainly been much more volatile. But the go-to is the 10-year. It has the most liquidity, it's the most interest for the investors, the economists of all three or four. It's 10-year is the most important usually. Let's go look at the currency market. First, look at the U.S. dollar index. It's old school. It trades in the futures market. This particular underlying symbol trades on the ICE market, which is out of Atlanta, Georgia, instead of Chicago. Still, the U.S. dollar index is comprised of several currencies. I say old school because there's much more developing countries than were 20, 30 years ago, but they're not included in the index yet. This index includes the #1 currency after the United States dollar, the euro, followed by the yen, the pound, Canadian dollar, and so forth. So for the year, we actually made a new high for the year. Yeah, again, it closed red, but made a new high for the year. It's still strong like bull. There's a low for the year. There's the high for the year. And yeah, since we closed red back inside that prior candle, it's a huge consolidation range here. I expect interest rates to still be raised later again this year. Bitcoin made a new high for the year, still below the lows of last year and the year prior to that. Yep. Pump and dump, as is all or much of cryptocurrency. Let's take away this midpoint. Let's go into looking at the individual currencies. First, look at the major currencies, the ones I mentioned in the US dollar index. We're looking here on currencies in the futures market. This is the Chicago futures market, the CME. The symbols always start with a / followed by the number and the letter for currencies in the futures market in the CME, at Chicago Merchandise Exchange. So it's between the high and low of the year, massive consolidation. Yep. All that energy building up in consolidation will break out some point and continue a trend, either up or down. Japanese yen, also between the high and low of the year, did make a new low for the year. Look, lower highs. The trend is down. Yep, last year it made a reversal, so we could call this a retracement from this trend. We're looking at the bigger picture. Overall, still bearish. In this trend here, we did a retracement last year, so this trend here, I'll be looking to see if it's going to break this midpoint and take out that low. Bearish bias Japanese yen. We're looking at the euro. Same thing. Look at the past 2 years. Massive sell-off, massive retracement, consolidation. I'll be watching how this breaks out and where that's going to go. We use a Fibonacci retracement to from the high there to the low there, see how far of a retracement it's done. It tested the 50%, rejected it. Yep. 50%. It's not a Fibonacci number. It's just letting you know that it tested 50% of the trend here. That's very interesting. Again, the probability is it's still weak against the US dollar. Let's take it from here, that high, and see where it's going. Same thing. Yep. Again, still weak against the US dollar. Looking here, British pound, the third largest currency in the US dollar index, the British pound. High, low of the year, massive consolidation. Do the same thing. We'll do a Fibonacci off this. Take that high, this low. Yep, it's done a 50% retracement, massive consolidation. Australian dollar made a new low for the year. 2 months of consolidation, highs for the year, broke below it, closed below it, bearish. Yep. Canadian dollar, also new low for the year, broke below this consolidation those 2 months. But this bigger picture here, look at this massive consolidation. Yeah. Still below the highs for the past 2 years. Australian dollar, Canadian dollar have huge correlations. They're both big, heavily weighted commodity countries. Metals, energy sources. When I say metals, copper, gold, silver, those kind of metals. And energy, coal, crude oil. It's not as diversified as the United States. And the Swiss franc, safe haven currency, one of the 3 safe haven currencies. Not so safe if you were invested in the banks. But again, they did a bailout with the taxpayers' money in their own country. So Swiss franc made a new high for the year. Also made a new low for the year. Yep. Massive consolidation. A lot of confidence lost in here. Okay, let's go broader into the currencies to include looking at the major currencies against each other besides just the US dollar. And if you notice, most of them I've just showed were in consolidation for the last few months, building energy for a breakout of the trend one way or the other. Looking here at the euro yen. What that means is the first 3 letters is typically the stronger currency. The first 3 letters, euro, followed by the yen. It's trending up. That's in favor of the euro. What do we got going on here? Massive consolidation. There's a high for the year. There's a low for the year. So it did make a new high for the year in favor of the new high, giving strength to the euro against the yen. Again, overall, it's a huge consolidation here. Euro, Japanese, euro, British pound. New low for the year. That's in favor. That's a weaker euro in favor of the pound. But again, massive consolidation here. So when this made the new low, that's again, the pound gaining strength against the euro. Now the euro Canadian dollar, European currency against the North American currency. New high for the year. We took out the high of last year. Here's the high of the last year. And a new high for the year. Again, first 3 letters are what? The euro. So that means the euro gaining strength against the Canadian currency. Yep, broke out of this consolidation too. The first 2 months of the year consolidation. Inside candle broke out. So one will continue this momentum. We'll probably continue to the upside. One could look for a retracement for the entry. And the euro and Swiss franc, again, two European currencies. New low for the year, and then close back up here. Getting that, a lot of that volatility of this month dealt with what? The banking crisis, as well as the crisis that Swiss government and their bailout of their bank. So it did make a new low for the year. Went back up, giving favor to the euro. Again, losing that confidence of the Swiss franc. The euro Australian dollar, new high for the year. Took out the high of last year too. Nice. Again, euro beating the Australian dollar, beating the Canadian dollar. How much more do you need to know? Don't be holding Canadian dollar. Don't be holding Australian dollar. Be better off holding what? Well, one of them would be better off holding the euro as well as the US dollar. Okay, that was the euro. Now let's go look at the currencies against the yen. And these trade as stock ETFs. You could trade them also as in the futures market and options. So you could be actually investing in these. You don't need some institution to manage your money. You don't physically need the physical cash in your pocket or sitting in some safe deposit. Euro, Japanese yen, we already spoke about that. British pound, Japanese yen. Inside candle for the month, very interesting. Inside candle means indecision. Prior month was the new high. So it was stuck between the high and the low of the year. Massive consolidation. Canadian dollar, Japanese yen. Look at this, trending down. So that means the Canadian dollar losing against the Japanese yen, but a huge trading range this past month. Didn't take out the high, but it did make a new low and came back just like the other currency I showed you. That's the same thing with the euro. So again, they were losing confidence in the Swiss franc and Japanese yen. But again, neither one of these I would want to be holding, the yen nor the Canadian dollar. And Swiss franc, Japanese yen, two safe haven currencies. So the trend is up. Let's zoom out. The past several years, the trend has been up. The end of last year, it did a retracement. And this year, it's been making higher highs. First three letters, Swiss franc. So Swiss franc is beating the Japanese yen. Again, I would not want to be holding neither currency. Australian dollar, Japanese yen. It's like I mentioned, I wouldn't want to be holding neither one of those. So new low for the year. And then close back upside in this body. Massive consolidation also. Again, a lot of this volatility dealt with what? Dealt with the banking crisis that has an effect on currencies as well as commodities. All right, let's go on to the last pairs. Pound. Already did the pound dollar, pound yen, pound euro. Pound Canadian dollar. New high for the year. First three letters, pound. So the pound is beating the Canadian dollar, just like the euro is beating Canadian dollar. Yep. Still in a tight consolidation here. And did do nicely that, look, this was massive consolidation, a lot of unknown, but breaking up, test that new high. There was confidence to buy it. Yep. So you're deciding a European currency to hold. If you do, you can narrow it down to the pound and the euro. Pound and Swiss franc. New low for the year. And then rejected it, went back up here. Massive consolidation for the last several years here. Past several months. Consolidation typically like this, sideways pattern, a lot of overlapping. And the pound and Australian dollar. New high for the year in favor of the British pound. Nice. Broke out of this consolidation. Look at this consolidation for the past several months. Here we go. And that's the broad currency market and yields. There's many other currencies you can look at, but their liquidity is nowhere as good as these I just showed you. So again, the leadership of US dollar, British pound, euro is where people are parking their, or prefer to hold those currencies.